Good morning, everybody. It's Christopher from Serene Education with the 4 major news update for the 8th of November 2012. Hi, guys. Okay, let's have a look at the 4 majors this morning, starting with the euro against US dollar. We've got a lot of news out today, guys. Just to bring you guys up to speed, we have trade balance figures not only for sterling but the euro. We have the most important ones today: the official bank rate for sterling. We have the minimum bid rate for Europe. So that's the interest rates announcements for both countries. Then we have ECB press conference this afternoon with Draghi probably speaking in that, so that'll be one to watch. Then we go into the US session. We have trade balance figures, also trade balance figures for sterling, trade balance figures for Canada, trade balance figures for the US. So there's a lot of news today, guys, a lot of news, so be aware of it. Let's see how all those go. Be aware of any, take on any of this. Make sure you are aware of all this news announcements and when they're likely to be presented, because we're going to see if they're going to be really factoring in price actions today. Guaranteed. If we come up with any surprises with the interest rates announcements in particular, we could see some market volatility. Trade balance, also unemployment figures, US, very, very important. It's imperative, especially the unemployment side. I want to try and keep the unemployment down and employment up. Very, very important. Okay, so let's get on with euro. What's been happening after yesterday? Any news or any movement really after stuff stateside? A lot of volatility. You can see quite clearly on the daily candle here. A lot of wick to the upside. A lot of buying sentiment coming through after the elections stateside. However, you can see quite clearly that prices still closed below that institution moving average beforehand. Very much a support, and near term you can quite clearly see very much a resistance level. So as long as it maintains below the institution moving average, we should be looking for price to continue to the downside. Notice his histogram on the other side now is red, predominantly blue through this period now. However, near term trading below the institution moving average, this is now engulfed the prior 2 days. A lot of wick on either side, but you can quite clearly see now on our daily, I've taken a Fib retracement from the low here that we had earlier this year in July to the current high that we've seen just recently. Near term in September, you can see the 23.6 Fib retracement area here at 1290 was breached not too long ago. Near term trading below the institution moving average, which was positive up until then. However, looking negative now, the longer trades under that level, and you can see, that the 38.2 yesterday Fib retracement was targeted at 1275 and reached, and you can see quite clearly over the Asian session price bounced somewhat, but still in a very tight consolidated range. It's imperative to, if we're going to see further downside movement, that 1275 is broken and closed below. Get it closed below that, then we should be looking for the next port call would be down here at 1260, which is the 50% retracement, going into a tight consolidated range yet again that we saw through mid-August right to the end, and then 61.8, etc. So at the moment now, please be aware of these intraday support and resistance levels. I've put those down on my 4-hour chart now, so I'm quite clearly well aware of that negativity that we saw yesterday on the 4-hour at 1 o'clock yesterday afternoon GMT, selling into that 38.2 Fib retracement, and since then just pretty much going sideways. So one thing to notice, the histogram on our side very much negative, and we're trading still below that major support and resistance level, or the institution on our daily, and that is now marked out in this black horizontal line. So as long as we trade below that, then we should be looking for negative sentiment, and near term you can quite clearly see a huge fall off in terms of sentiment. Massive selling yesterday at 1 o'clock GMT, which has taken us lower than the prior consolidative range, and you can see that was the price support. You can see quite clearly where price is trading now. It's trading in that tight range. It's finding resistance at the level. So what we're going to do on an hourly, 30-minute, and 50-minute is to now use this consolidation here on our 4-hour. So 1276.77. Make a note of that. 1277 now is going to be our resistance, intraday resistance. Price has to remain below that level to see price continue to the downside. So this is how we can use these price support and resistance levels. You see consolidation before support, now resistance going near term into this. A lot of resistance here going into the open last night on the Asian session, and since then prices fell to actually break higher than that. So 1277 is now going to be our intraday resistance level, and as long as price fails to actually break and close higher than that during the course of this morning or remainder of this day, then we should be looking for a nice bearish engulfing candle here, and look for an opportunity for price to reattempt those 1273.50 mark to the downside. Break below that, then we should be looking for the this is the break of 38% here, then we should be targeting the 50% down. On to sterling. Let's have a look and see what's been happening here. You can quite clearly see that the 1600, that psychological round number, price is playing tic-tac-toe with it again. However, you can see quite clearly over the past 3 days, yesterday in particular, a massive spinning top, and you can see quite clearly that price coming unstuck at 1600. Okay, price remaining below that 1600, and as long as it remains below 1600, ultimately we want to see a decision candle, because this is a spinning top, which is an indecision candle. We want to see decision, and if price is trading at the underside and finally to break above 1600, then the decision or the decisive candle we're looking for is a bearish engulfing. Nice bearish engulfing candle here to the downside on our daily would confirm this is now resistance, and price, or we'll look for price to actually target it. The next potential support and resistance level here at 5900, nice round number, and that's taken from the low, the fib extension from the low that we had currently in June to the current high at 16300. And you can see the 23.6 here at 1605 was targeted a couple of times. 38.2 would be our next target if we can see resistance here at 1600, and then look towards the institution moving average here at 1585 also as a clear target to the downside before we can look at the 50%, which is a clear cut resistance level and support just near term through most of June, July, August at 50% here just below the 5900, and then towards the 61.8 down the bottom before we see price pretty much giving up everything back towards that zero line or the 5300, which happens to be our major support and resistance level on our monthly chart. So near term, you can see quite clearly histogram very much blue up until this point. However, you can see just the past 2 days, you can see that the histogram has now married with the other two requirements. We have a red arrow, red candle, and the histogram on the other side telling us the sentiment is starting to look negative now. And the longer it stays below 1600, the more likely that sentiment is to remain negative. Okay, so we want to see, if anything over here, we want to see a bearish engulfing candle, or look to see price remaining, if I look at my 4 hour, to remain below that 1600. And as long as it does that, then we should be looking for price to actually move to the downside. Tight squeeze, you can see forming higher swings to the upside at the underside of this. As long as it's capped by the 1600, look for a bearish engulfing breakout, and then we can target that 5900 near term. Onto the US dollar Swiss franc. Let's have a look at the daily. Okay, price trading under, or trading in a massive consolidated range through September, October, and going into November we had this breakout as the US dollar has found a bit of momentum against its Swiss counterpart. Now breaking to the upside of a major resistance level. You can see the institution moving average here acting as a major resistance level for price at 940. Price actually breaking above that is considered a positive sentiment, and as long as it remains above 940 now, we should be looking for price to actually move higher. Yesterday's candle, a hell of a lot of movement yesterday, and you can see that price actually trading at the upper end of the 50% of this line, closing higher than 50%. So after a indecisive Monday, a day prior to that, we've seen our price building on that. However, want to see price now pushing on. You can see the histogram on the other side turning blue after a lot of negativity near term as price had been falling. So it's imperative that price now remains above 940. The longer it stays above 940, the more likely we can see price moving or edging higher towards our first port of call would be, this is the 23.6 fib break here. This is our 38.2 at 950. Get above the 938, well, target the 938 to start with. Then look at 960, as I say, can target at 50%, 61.8 the top here, and ultimately 78.6 to the top. So got all these target areas to me on my daily. As long as if price remains above that 940 now on my intraday time frames, I'm going to make a note of that. You can quite clearly see, there we go. 940 below, that's important. What I've done near term is taken my higher fib retracement from the all-time high here and plotted the fib retracement. So you can see 935, that's the 23.6 fib retracement. Near term we had the 38.2. The price is now playing, it's trading on either side. You can see quite clearly over the past 20 hours or so, price is now trading above that 944. As long as it maintains above 944 now and uses its support, we could see price now building on that towards that all-important 951, etc. to the upside. So intraday, you can see a lot more blue. You can see price is trading, was trading in a consolidated range. Now it's broken higher. As long as it maintains above this now, you can kick on from that. We should be looking for nothing more than upside movement for the remainder of this week. Last bit of the day is US dollar Japanese yen. Let's have a look at the daily. Very mixed signals. We would like to see price actually finding support now above the 80. Price has been pulling back over the past couple of days. Two very indecisive candles. Doji followed by a spinning top. This is almost like a hangman. Call them a hangman. And sure enough, price has actually fallen. Yes, a lot of movement to the downside during the course of the Asian. Well, by the close of the US session last night, price had pulled back and now closed quite comfortably above the 80. However, on the Asian session, price has now fallen. The US dollar has fallen even further against the yen overnight trading and now taking us below the 80. It's imperative this is to remain positive, that price needs to remain above 80 because that's psychological round number and is also a major support and resistance level. If price fails to remain above that 80, you can see the near-term trend up, and I just want to make that aware so you can swing higher, swing higher. It's imperative that price actually stays above that. If it doesn't stay above that 80 mark, then you're going to see more negative sentiment coming into play, and we should be looking for the downside here, particularly the 79.50 as our first target, back towards the institution moving average on our daily. Histogram remains blue on either side. However, this candle trading lower than this, it's still daily candle. Anything can happen for the remainder of today. Very important to see what happens on unemployment figures as well as trade balance figures for the US to see if that actually helps price moving higher. We get some fantastic trade balance figures this afternoon. We could see a positive unemployment claim. We could see the US dollar rally this afternoon. So a lot can happen. Ideally, we want to see price trading above the 80. The longer it finds resistance now at 80, the more likely it is price is going to revert to the downside, and that's not going to be good for the overall sentiment of this. You can see a lot of movement near term for the US dollar. We don't want it to come unstuck now at a critical support and resistance level. Get above 80, remain above 80. We should be looking for nothing more than positive. Stays below 80, however, near term we should be targeting the downside yet again with prior resistance and support area here in the shape of the 79.50 is potentially our first target if that resistance remains strong at 80. So today could be one day where we could just rather bide, stand aside and see what actually happens with trade balance figures as well as the unemployment for the US to see if it actually helps push price higher to find support above the 80 or remains or keeps price below the 80, which will then signal we should be looking for the downside for the foreseeable future. That's it for today, guys. I hope that this was of benefit to you. Please, if you are using this template, to follow the rules of the strategy, back it up with sound money management rules, and just to follow simple principles of trading, support, resistance, etc. Excuse me. But keep it as simple as possible. Don't overcomplicate your trading. It's when you start making it really, really complicated that you start making major mistakes. Okay, so keep it simple. Look for price to tell you where the sentiment lies in those candles and then trade that. Okay, it's very, very important. You can use candlesticks to give you or to show you the sentiment, where the genuine sentiment, whether it be bullish or bearish, where it lies and what you should be looking for. If you start seeing indecisive candles with a lot of wick, if you start seeing candles with a lot of wick, it's telling you that there's a lot of indecision out there, and we don't trade indecision. Rather give that candle back to the market and wait for a decisive candle before we start trading. Patience is key in trading Forex or anything. You should be very, very patient. Okay, it's one of the ones out there that are very patient, looking for the setups, are the ones that are going to be profitable going forward. So remember that and apply it. Otherwise, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.